The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Tom O'Brien.
Welcome, folks. It's Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the S&Ps off 3. Nasdaq futures are off 2. We have gold up 540. Silver is up 7 cents. Bonds, you got the 10-year down 5 ticks at 127. The 30-year off 12 at 159. Those babies are doing ABC structures on the way down. And King Dollar. King Dollar's up 184 ticks, trading at 99.59. The euro is down 51 at 10583. And folks, if you haven't test drove the Nadex platform, this is a dynamite time to try it. Why? Because I suspect what we have here is a large change of trend in the U.S. dollar. And it's not just because of that, okay? But the bottom line is that I'm going to show you a trade out here that's pretty neat right now. You can come over to our website at TFNN. As you come over there, you see the banner on the top, on the side. Hit that banner. They'll bring up the account. They'll put $25,000 of paper money into it. You'll start to understand how to trade these option structures inside the Nadex platform. And if you go over there, what we're going to be looking at first is this. Is if you go into Forex, if you go into spreads, you're going to look at the Euro USD. Under the Euro USD, these contracts have different time frames in them. Well, there's a 9 to 11 o'clock one. And if you check this out, so the 9 to 11 o'clock, what this would do is this. You're trading at 9 to 11, and you're looking for the 10.580. Now, check this out. This is pretty wild. So the 10.580 right now, you'd be risking, okay, $10. That's it. You're risking $10. Your max profit could be $90 per contract. So it's $10. That's the bottom line. And that's what's so sweet about these contracts. You do not have to risk a lot of money. The key to these, one of the keys is this, is that when you're buying something, you want to buy as close to the bottom of the box as you can. When you're selling it, you want to sell as close to the top of the box. Now, you certainly just don't do this just because the thing is $10. You don't. Watch this. If we go over to the dollar index for a second. Okay, first I'm going to go with the dollar index and show you where we're at right here. So that's the trade. You get 2 hours. Basically, you're risking $10. What you're looking for, here, let me go to the dollar first so I can show you what I'm doing here. So what the dollar has done is this. The dollar's done 2 separate things, too. It's really cool, folks. Okay, yesterday when I was going through this in the afternoon show, we'll go through the smaller one right now. What we have is this. We're at 99.66. The dollar had hit 100.3003 yesterday. Then you had the downdraft. Well, this downdraft, even if it's not a change of trend, what the probabilities that it will get hit is large. Okay, that downdraft there gets you at 98.64. We go back over to the euro. We take a look at what because that's what we're trading. We're saying we want to be long the euro. What happens is, that when we take a look at the euro here, the euro is at 105.75. Well, the spike that we had when the dollar went down, the euro goes to 10684. This contract here is 10680. Okay, so the bottom line is that it's possible that. Okay, there we go. It's possible that you can get that spike in a couple hours. What I do expect you're going to get is this, is that right now we're at 10557. You have to get to you're giving up on this contract here, you're giving up to 8.9. That's what you're giving up there. So you wouldn't come in the money until 8.9. But guess what? 8.9 is not the end of the world when you're talking currency markets. Right there, you're talking 13 ticks. That's it. So it's going to be pretty wild watching how this whole thing shakes out. Now, inside that context, dollar, right? Bottom line, Gold. Let's go to gold for a second because it's actually bonds are the ones, but let's go to gold first. Bonds are moving. See, bonds are large change of trend too. This is going to be wild watching this thing shake out. So we go to gold for a second. GCJ. We go to the gold contract. We take a look at gold. What gold has done out here is this. 1152 is the low. High out here today has been 1160. What we would like to see, and this will be really hard to do on a Friday, but you know, bottom line is that it's acting pretty cool right now, is that it's the 1162 area that you want to get back inside. We hit 1164.20 yesterday. You get back inside 1162, you get some action there. Okay. Now, let's go to the bond market, because what we have with bonds is this. Bonds are in a large ABC structure on the way down, and it's a complex ABC structure. All a complex ABC structure means is that you got below the B point, you did it with volume, you come back on the other side of the B point, you can't, well, in this case, we didn't take it out, okay, which was the 27.16 area. You could have got to the top of the consolidation, which is 128, but it looks like it's not even going to be able to do that. Bottom line, your A point on this is 130.20, so it's almost it was almost 131. The B's 126.12, so you get 4 plus 8 ticks, and your C point is 128. Oh, that's good, and 12. Okay, so your number is 124. You're gunning for 124, and right now you're at 127. That in itself would be a nice little trade. What I do expect you're going to see, though, the currencies, we're going to have some currency movement out here today. Oil. What do we have with the oil market? What we have with oil is this. Oil market, it continues to lower price. We'll see if we get any juice behind this today. There's not much juice behind it. Well, you get 69,000 contracts. We are at, hey, listen, it's going to go into it. It's going to go into this low. The low out here in this contract is 44.37. You're at 46.17 right now. That baby is saying, guess what? It's going to press those lows. That wants to press those lows, no doubt. Now, our own S&Ps. Let's go take a look at the S&Ps, because what we had with the S&Ps out here yesterday is this. S&Ps go to the, if we take a look at the SPY first, the SPY, what you're going to see, we go right to the number. The number we're talking about is 207.10. 207.10 was the low on March 6th, so that's last Friday. That's when we came down hard. We came down with 188 million shares inside the SPY. We went back up yesterday, and we come back up yesterday with 93 million. Okay, so on the daily, you're down with volume, you're up with lighter volume. On the weekly here, this is what's going to be pretty crucial out here today, which is pretty wild. The close out here today, if you're a bull, you want the close over 207.24, which is not too far. Because what that would do, that'd put you over basically a consolidation bar, and that would say that, okay, if you're a bull, you'd have a shot that you can run up to those highs next week. You're a bear, what ends up happening, you just want it underneath this 207.24. The volume characteristic, it's going to be more volume. You know, we're coming into 464, and you've already done 452. So we've already done more volume than you're coming into. So bottom line, we'll see whether the price hangs up or down. What I expect we're going to see out here today is we're going to see sideways movement. You're going to see a small expansion of volume as we come down to lower price. HLF, let's see what's going on with Herbalife out here. The Herbalife story continues to go. So Herbalife closed at $33.25 last night. It's trading at $35 right now. And this little baby, so let's look at this on a longer term basis. Okay, so we're not under the lows yet of 2012. It wants to go after it. The $24 is game right there. Put this on a longer term basis. You know, well, we haven't tested the lows yet. That low of 24.24. What is happening there is that the Wall Street Journal reported today that Ackman and some consultants were basically they're under investigation for moving the stock, market manipulation. The bottom line, folks, it's going to be wild. It may be one of the consultants, but there's no way Ackman basically. My take is no way that he's done anything wrong. It's not even close. In fact, the government, the ones that should be basically looking after them, it should have been looking after them for a long period of time. And if you remember, Ackman, when you're a large, when you go after a company in a large way like he does, bottom line is that they're going to come after you. In fact, yesterday I cracked up. We even listened to Fast Money, which I was surprised. One of the guys on Fast Money, they turned around and said, when you short sell like that, most of the time it doesn't work out. He's out of his mind, okay? The bottom line is, if you remember, on the housing crisis, the title insurance companies that Ackman shotted in a huge way and laid out the whole story that, hey, these guys are going to basically get on the tubes. Bottom line, they were going after him for a year and a half, 2 years, before the fact of the matter was that, yeah, they all blew up and they went out of business. So bottom line is that, maybe a consultant did something, but I actually heard him on CNBC this morning. He's going on all the presses, and it was a good presentation. I mean, he was there answering questions, and that's a big deal. Let's go back to this euro and take a look at this euro and see what we're looking at out here. So the way the binaries work, folks. Well, this is not a binary; it's a spread, and this is what the difference is. The binary option, well, here, let's go look at one right now. So the difference between the binary and the spread, the binary is a yes or no decision. And let me see what we have here. So the euro, 9 to 11, we're at 1.572. So what happens with the binary is that you'll be going up the ladder and you're saying, okay, I think it's going to close at, let's say, something over 9.3. Well, what the difference is that if, in this case, so watch what the difference is. We're at 7.6. If I did a 9.3, okay, which is 18 ticks away, right? You'd be risking $25 to make 74. Now, that's a yes/no decision, though, and that goes right to 11 o'clock. Sometimes, if something's really skewed, meaning that you're at a lower swing point and you have a lot of conviction that you think this is going to go, a binary is not bad. I like the spreads because the difference in the spreads is that it is not a yes/no decision. In the spread that we're talking about, all that happens is this, is that we need, you need about 13 ticks, and at 13 ticks, you're going to get your $10 back, okay? Anything above that, you're making money, okay? So that's the difference. It's not a yes/no decision going up into that time frame. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Let's see. So the S&Ps are down 1, NASDAQ is up 2, gold's up 5, and King Dollar's up 264. We're going to be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. If you haven't test drove the Nadex platform yet, folks, great time to do it. Come over to our website at TFNN. See the banner on the top, on the side. You can hit the banner, bring the account up. They'll put $25,000 of paper money into your account. You can start understanding how these contracts trade. Now, when we take a look at the market itself, what you want to be looking at is that if you're a bull, you want to be buying bottoms of the boxes, going long. If you're a bear, you want to be selling tops of the boxes and going short. We've been talking about the euro dollar, okay? So I want to show you something inside the dollar. Now, this is really wild, okay? Because what we've had is this. First, you get an ABC structure. So an ABC structure on the way up or the way down, folks, okay? When they finish an ABC structure on a daily basis, bottom line is that they do something different on a shorter term basis, okay? So let's say you get an ABC structure on the way up. You do an ABC structure on the way up, then the thing starts going sideways, it backs down a little, does all of the above. You have one going down, same deal, okay? It just doesn't keep going. Now, there's three separate ABC structures. You can do a 1-to-1, a 1-to-.382, a 1-to-501, and a 1-to-.618. So what that would mean is that, let's say, if you move 10 points the first time, 1-to-1, you move 10 points A to B, and then C to D, C to D, you move 10 points. The first one would be 10 points, then you move 13. The second one, 10, you move 15. And the second one, you move 10 points, and then you move 16.18. Now, And that structure there, well, here, we go back to the dollar. So what the dollar just did is this. The dollar just finished an ABC structure. It started at this 87 level on December 14th. So you get 87, 83. You run up to 95.77. So you got, that's $8, right? Your C point is 93.38. And $8 with that is 101.38. We hit 100.06. Okay, so yeah, can it go a little higher? Yeah, it can. But you're talking about a very small amount. Now, that being said, what we had is that when we hit the high out here yesterday, it came off that high, with some volume. So that was like, oh, baby, okay, so is that it? Well, when I was doing the show last night, what happened is that I brought the continuous contract back. And as I brought it back, I realized that, oh, baby, look at this. Look at what has been sitting out here. So what has been sitting out here in the U.S. dollar is this. You know, I had known that we've been going up since 2011. But guess what? This was an ABC structure, and this is an extended structure. And this structure, more than likely, has a much bigger implication, and that implication would be a total change of trend once again. So this is what you have. 2011, you're at 73.01. Okay, so let's get this down straight. This is so cool. It's amazing. I love these large change of trends. It's a whole different ballgame. So 73.01 is your A point. Your B point is 84.59. So what do we got? We got 851. So you got 1158. Your C point is 78.93. Now, you can see that we're at, so what you do is this. First, you go like this. You're going to take, when we talked about the ABC structure, you got, 1 to 1, 1 to 0.382, 1 to 1.618. So first thing you're going to do is I'm going to take the 11.58 times 1.6618, which gets me 1873. Now watch this. We take 1873 onto the 78. 1778. This is crazy. It's more than a 1 to 1.618. So 18.73 is 97.66. So what we've done is that we've gone over a 1 to 1.618 expansion. What you do when that happens, folks, guess what? It's an absolute change of trend. So we'll see where this shakes out in the next 2 to 3 weeks. But I suspect that's what we're going to get. Now, what you can do is that, let me do this. The largest ones I've ever seen, when the downdraft of the market, we went to a 1 to 2 ABC structure on the way down. So watch this, 11.58 times 2. You stay right there. We'll be coming right back. And we're going to give you that number as a 1 to 2 ABC structure on the way up. This is Tom O'Brien. This is TFNN. Going to be coming right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the market open up here. We get the Dow right now down 85. You get the Nasdaq off 11. S&Ps are off 5.5. Gold is up $5. Silver is up 4 cents. Bonds, we have the 10-year off 6 ticks. 30 off 14, and King Dollar. We don't have any movement yet. King Dollar still up 284. You get the euro down 60. Let's go over and first let's go over and take a look at this. Futures contract, because what you do have going is that this future once again wants to give it up pretty quickly, which is pretty wild for a dull market. The first sellout here was a good one. We are right now, we're at 2051. It came into that lower swing with juice, and that's saying that the setup is 2045, man. They're gonna get this thing going. It's going to be pretty wild watching this whole thing shake out, man. So what we had yesterday when you went topside at 0930, bottom line, that's the last time you had any juice on the way up. There was 21,000 contracts. Yeah, exactly. As our man Jay saying in the den, forget it, man. 21,000 on the way up, 48,000 on the way down. It's going to basically take it apart, you know. And what you do have is this. This is a good little heads up, and this is what it is that when we've had volatility now for about a week and a half, 2 weeks. There's been absolutely zero fear. There's zero fear in the marketplace. The bulls, they're not scared of a thing, okay? Bottom line. Going into a weekend, with that aspect that there's been no fair going on. They got it going last Friday. They're going to get it going this Friday because the larger operators in the market, guess what? They're going to go home. They're feeding. They want to go home as clean as they can go home. So you're going to see some nice, fast volatility out here, and I expect it's going to be quick. Inside the Dow Industrials, and if you do trade the Dow 30 over in the Nadex product, okay, that is a nice little product to trade. You get inside the Dow out here today. You only have 3 stocks that are positive. You get J.P. Morgan is up 24 cents, Walmart is up 5 cents, and you get Big Mac up 2 cents. Other than that, every one of them are down. Leading the charge on the way down, you have Chevron is down 121. Big Blue, IBM is off 186. We're going to go back to Big Blue. See, Big Blue is going to destroy the Dow, folks, okay? Actually, you know what just added up yesterday, too, is that Microsoft and Intel. Coca-Cola is off 33 cents. Visa's down 234. If we go take a look at Big Blue for a second, IBM right now is down 180. You're at 56.80. Your swing low out there that it wants to go test is 150.50. This has been building cause for a long period of time. Yeah, they were going to whack it. Okay, so the first sell on this was a good one. The first sell, they just took the lows out. They're going to take these lows out, man. Someone's selling into this and trying to move this thing out. The thing that's amazing about Big Blue, you got to remember, the amount of shares outstanding are like insane out there. It's almost 1 billion shares, 988 million shares. So it certainly takes a long period of time for large operators to get out of an equity like that. If we pull up inside who owns what, and just to take a look and say, okay, it's Berkshire Hathaway's been double downing in a huge way. Right now, they own 7.7%. Excuse me, folks, of IBM. The sellers out here. This is what you have with the sellers. Now, this is where it gets really dangerous for IBM. Wellington Management, okay, is a seller. Wellington, they have 2 million shares left, but as of December 30th, they sold 3.3 million. And watch this. Watch how you get down. Where's MFS? MFS is going to be in here somewhere. There it is right there. MFS. MFS is a seller. 1.1 million. They have 5.9 million left. Now, I don't see Fidelity. But what's so wild about this, folks, and depending on how long you've been listening, I picked up on these guys. I'm talking about years ago. We're talking about, like, my office was right down the street. Before Fidelity, well, they have a couple different offices, but I was at McKinley Square. They were up the block from me. But what I realized is that not only Fidelity was there, MFS was there, Wellington was there, and we all lived in the exact same town outside of Boston. The money managers of the larger funds there. Bottom line, what they do, when they see these notices coming across, they all trade the same way. They all trade. If they come into an equity, they come in together, they go out together. They don't specifically come in together, and I don't expect that they actually even talk to each other. Because you don't have to when you tag another firm. And what that specifically would be is that you can tag a stock, and every time that someone large is selling or buying IBM, basically you get a notice that that's where they're buying, and that's where those accumulations and distributions start happening. So I'm certain they probably do the work, but the reality is that they go in and out of stocks, and they do it at the same time. I remember when I first started the Gold Report, the only institution that owned any gold stock whatsoever was Fidelity. Fidelity had owned 14% of Gold Corp. And an institution didn't even buy anything for about, that was 2002. It took about 2003, the middle of 2003. Then you saw institutions starting to buy them. Fidelity was the largest player inside that gold market for about 5 or 6 years. Big time, too. If they would come in, the other ones would follow them. When they would go out, oh, man, we would destroy the stock, So you'd always want, in particular, those gold equities, you wanted to know where they were going. Because when they accumulated a large position, they wanted to go out. It wasn't a good scene. Let's go over and we take a look at the S&Ps for a second. So ESM, we're on the M contracts right now. That rollover happened right at the open, I believe, okay? So we're at 2051, and Yeah, she's building cause to go lower. This is going to be a fun day out here trading, folks. If you are over at the Nadex platform, okay, we take a look at these S&Ps for a second. You do a little bounce, but let me pull this up. So if you go into the, if I go into the indices again and go into the spreads and you go into the US 500, and let's see what time we got. Okay, you get 941. So if you go 9 to 11, 2052, 2052. 6560. Yeah, I wouldn't want one of those. What you're trying to do, what you want to be doing, I want to find a box that the top of the box, you're very close to the top of the box. That's how you want to shake that baby out. Why? Because what ends up happening, your risk is much smaller than your much smaller than your reward, right? That's what you want. You want your risk smaller, the reward bigger. Gold contract. What do we do with gold out here? Well, we have with gold. Gold's got to get away from where we are right now. This is going to be interesting. I mean, making it through Friday is a big deal. There's no doubt. Making it through a Friday in the gold market is a good scene. Right now, the way gold is set up, we should get another $5 out of it, though. That's the way this is set up right now. It looks to me like you're at 57. And can we get, well, is that 60? Well, we get to 60. 60 wouldn't be bad. 62 would be better. We can close this thing out at 62, would be really in sweet shape, you know? Yeah. I know, that's something that is good to know. That's right. If you are trading the Nadex contracts, they are on the old contract, I believe. It's not that they're on the old contract. As soon as you bring that up, they're going to tell you what contract they're on. In fact, I'll look at this as soon as U.S. Yeah, I'm going to have to. As soon as I brought it up, it told me, but I was on the air simultaneously when that was happening. 2060 top of the box. Okay, good. $39 risk. Okay, is that the daily, Jay? What we're looking at, folks, is this. Yeah, perfect. Okay, man. Okay, so it's a beautiful thing, brother. Okay, so let me pull this up. Thank you. So what we're talking about, folks, is this: is that as you're going through these contracts, right? The longer amount of time you have, the better off it is. There's a 2060 that is hanging out there that you can risk $39, and in fact, you could get a 370 reward. Now that's good to 415. And what does happen is this: you can't expect that you're going to get a full VIG like that, meaning that 370, okay, because that's a monster, right? It's a monster spread. But what does happen in the market that we're in, well, guess what? We're in, might take a very fast market, number one, and the surprises are going to come to the downside. And yes, you can get those large moves. And those large moves, by the way, folks, will come out of nowhere. They'll seem to come out of nowhere, you know. That's just kind of how markets trade out when that trapdoor opens, you know. As Jay says, it's only 40 points down. Oh, man, you're going to love it. Look at Big Blue. They're going to head. Now, see, this is where this gets interesting. In fact, I was talking to my son last night because he's trading that product, too, and we were talking about that the aspect of if you're trading the Dow 30 inside that product, you want to have your eyes all over Big Blue. And this is where there's a slight advantage because the Dow 30 is so skewed that bottom line is that Big Blue falls apart, okay, which right now, see, Big Blue's taking out a swing point with volume. If Big Blue falls apart, what's going to happen, okay, is the Dow Industrial is going to have large pressure on it. That's kind of how it shakes out. Now, if we go pull this up quickly inside the Dow, just to see what's in here, okay, so right now, Big Blue, you got Chevron, Caterpillar, and Coke. And if you pull up the leaders, what ends up happening is that the leader is Big Mac. Big Mac is a dead cat bounce. So that's up 43 cents. JP Morgan, 43 cents. Nike, 17, and Walmart, 19. There's no big moves out here today inside the Dow, even though the Dow's not down a lot right now, okay? I hope IBB's ready to crack. Let's go look at IBB, man. I've thought ABB is going to be ready to crack like 8 million times. Oh, is on crack. Oh, that's so funny. So I was just reading something in the den, folks. I thought it said IBB's ready to crack. And yeah, I've thought it's been ready to crack so many times it's sick. What he put is that IBB's on crack, and it is. Okay, it's up 3.8 right now. It's going after 348.98, and you hit 348.72 thus far. You can expect we're going to get some nice volatility out here. Let's go back to this euro. Now, see, this is where the aspect of the euro, you risk $10, right, on that trade. Right now, the euro's going the wrong way, okay, meaning that, you know, you're not in the money. But the bottom line is that if you were trading the currency, you'd be losing like a huge amount because the euro just went from 77 down to 49. Well, guess what? It doesn't do a thing inside the Nadex product. You only can lose the $10. And what you still have is that you still have an hour and 15 minutes to come back into the money. That's the way this works. That's what makes defined risk, particularly inside a volatile type of currency market, commodity market. Right now, our own S&Ps. You know, it's all out there. Well, here goes gold. I like it. Let's go. Gold can do it. If gold, she wants to make this run. This is going to be interesting. Now, what's really going to be cool about this, folks, is that when you take a look at the gold contract, if gold's making this run, you're going to see the dollar back off simultaneously also. And I put this back. Let me put this back on 2 days just so I can get that. Okay, so we got the juice behind it too. Right now you're at 47. We're getting volume behind it. So right now this just has to get over the what is that? Yeah, 58.50. Right now we're at 58. You get over 58.50, guess what? It's going to be at 62. 60 and 62. It's going to make the run. This is going to be really cool, watching this whole thing shake out, particularly for a Friday. That's where this thing is shaking out. Now, let's go back to the dollar index again, because this is where the correlation can go, and you can be basically trading two separate contracts out here. So the dollar index itself, you got 11,000 contracts. That's not enough juice. She's trying to reach up and test the highs that were established out there yesterday. We'll see whether she can do it or not. Bottom line, though, the way that gold is moving, you get a couple hours, you can see those correlations basically change, meaning going from positive to negative in the dollar, going from negative to positive in the euro, and a lot of it's going to continge on basically are there going to be buyers inside the gold market? If we take a look at the GLD, the Street Tracks Trust, the way that the trust is setting up, it has the volume. The first, you know, let's see. Yeah, it's going to need a little more volume. The GLD is trading at 111.21, and oh, it's going to be fun. Okay, so it's right where it's going to need some real juice. Why? Because that's where it gapped down from yesterday. This is where it's going to need some juice coming into the marketplace. Right now, the good part is that this is going to start a new bar right at the very high. This is Tom O'Brien. This is TFNN. If you haven't tested over the Nadex platform yet, come over to our website, folks. See the banner on the top, on the side. You can hit that banner, bring it up. We'll walk you through a couple trades right now. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You get the Dow right now down 63, the Nasdaq's up 5, S&Ps are off $1.50. We get gold up 430. 10-year is down 7 ticks. The 30's off 24 ticks, and King Dollar's up by 579 ticks. The euro is down 98. Let's go back over to King Dollar and take a look at where she's trying to get into right now. So King Dollar is right at the highs. Okay, the high of yesterday was 100.03, I think. No, 06. Okay, 06. So she's gonna try to test that. There's no juice up here. That's the cool thing. Okay, so we go back over to the euro, because the euro, we got another hour and 10 minutes. We're at 37, and that has to get back up. And we get a shot at this, because what you have is this: is that your low out here in the euro is 4.95. You're at 5.40. It looks to me like this leg here is probably stopped right where it just went to, which is 35. We're at 38 right now, and we'll see whether they can get any juice in the next hour. If you are trading the E-minis out here, okay, what you want to be looking at, which one of our Tigers in the Den was talking about, it's the 2060. 2020. If you're a bear, if you're a bull, if you're a bear, folks, that's the number out there. It's a $23 risk for a $377 gain, and that doesn't mean you're going to get the full gist of it. The reason being, that's a 40 points spread, You'd have to get the full 40 points. But bottom line is that the surprises are going to come to the downside out here, folks. That's what happens in bear market moves. They're fast, they're furious. When you're talking about the aspect of a Friday, it is really sweet. Particularly because, see, if we go to the S&P, what you're going to see out here is this. We're going to have, if the S&P just closed where we are right now, what that's going to be is that's going to be a weekly failure. What you're going to have is this. It's absolutely a classic that you go into the downdraft that had been created last Friday, which is the 207, I think. Yeah, the 207.10, and you give it up. This is Tom O'Brien. This is TFNN. Have a great one. Have a safe one. We're going to be coming. You stay tuned. Mr. Basil Chapman's going to be coming up, folks.
Today, it's hard to